Your business is growing, sales are coming in, and you are getting closer to a major financial milestone. But with that success comes a big question. When do I have to start dealing with the GST or HST? It's a source of stress for so many Canadian small business owners. But it doesn't have to be. Today, we are clearing up all the confusion. We're going to talk about the magic number you need to know and exactly when the government requires you to register. In Canada, the key concept to understand the small supplier rule. The government considers you a small supplier and you do not have to register for GST, HST, as long as your total worldwide revenues are 30,000 or less over a specific period. But here's the critical detail. It's not just about a calendar year. CRA, Canada Revenue Agency, looks at your revenue over any 4 consecutive calendar quarters. Think of it as a rolling 12-month window. The moment you make the sale that pushes your revenue over that 30,000 threshold in a rolling 12-month period, you are no longer a small supplier. From that point on, you are required by law to register for a GST, HST account. Once you are registered, you must start charging the correct rate of GST or HST on your taxable sale. You collect that money, and it's important to remember it's the government's money, not yours, and you remit it to them when you file your GST, HST return. So you must register after you hit $30,000. But what if your sales are less than that? This brings us to a really important strategic choice. Even if you make less than $30,000, you can still choose to register for GST, HST voluntarily. Why on earth would you do this? The answer is for one big reason: input tax credits, or ITCs. When you are registered for GST, HST, you get to claim back all the GST or HST that you paid on your legitimate business expenses. That could be the tax on your software subscriptions, your office supplies, professional fees, or even that brand new laptop you bought for your business. Those credits can add up to a significant amount of money back in your pocket. If you sell mainly to other businesses, registering early is often a great idea. Your business clients are also registered, so they just claim back the GST, HST you charge them. It doesn't affect their bottom line. However, if you sell directly to the public clients, you might want to wait because adding tax will increase your final price. So to summarize, once your revenue hits $30,000 over any rolling 12-month period, you must register. But you can choose to register early to start claiming back the tax you pay on your expenses. The best advice I can give is to check your revenue carefully every single month. The moment you see you've crossed that $30,000 line, your next step should be to get registered. Don't delay. Have you registered for GST, HST yet? What was your experience like? Share it in the comments below. And if this was helpful, subscribe. Practical Canadian business advice for bookkeeping.